Hey, what's up? Welcome to DGenEd. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts and going over data. And so here I am recording this on Wednesday, February 19th, after the market has closed. And in this video, I wanted to do a little bit of a comparison between two stocks that I have gone over in prior videos. And yeah, I made a little bit of a decision with one of them today, really, I guess with both of them. And yeah, I just wanted to kind of give a breakdown for why I made the decision. And then, we'll see over the next few days, next few weeks, if I made the right call or not. And so, anyways, the two stocks that I wanted to go over, the one right here, this is Celsius, ticker symbol CELH, which closed the day at a price of $26.09, being up nearly 15% on the day. Got a nice gap up and a continuation higher. And then the other stock that I wanted to go over is Wolfspeed, ticker symbol Wolf, which closed at a price of $6.94, being up a little over 3% on the day after steadily going up the past 5 days. So yeah, I wanted to dive into these just because, I think that there's just a really nice example that really demonstrates my learning. And if I am correct, I'm learning as I do this, hopefully it's a good lesson for you guys. And just so you know, at the start of the day, I was holding calls on both of these. As of right now, I'm only holding calls on one. And if you want to learn a little bit more about the options that I am referring to, I do go over them over the course of 14 weeks. I believe the Celsius one, I think I went over for maybe 12 of those weeks. The Wolf one I added more recently, but there's this playlist here. You can go from the channel to the playlist tab, and you can check out some of the details on those options because it was my learning process and getting more familiar with them. And yeah, I guess while I am over here, I did also do some other videos. There's this one where I do kind of a deep dive into the Celsius call, and then over here, I believe I go into some options data with this Wolfspeed one that you can see there. So yeah, but diving into the charts. Celsius, lots of news. I was actually getting a little bit concerned that this would keep going lower, getting down to around 21, or, like right where you see this 1618 Fibonacci level at $20.81, maybe going even lower to some trend lines that I had drawn down there. But it does look like Celsius was forming this downtrend, broke above it with strength on February 13th, going up 6.5% on the day, consolidating over here, forming a little bit of a bull flag. I was kind of expecting there to be a retracement to around, the golden pocket here. So that's the 618 down to the 65% retracement. Right around 22 bucks. You can see I got that alert right there. But the lowest that we came down to was on the 18th, which was yesterday. So that was Tuesday after President's Day. And so the low on Tuesday was $22.25. So nearly getting there. But then my understanding is Celsius announced yesterday during the after hours that they'll have earnings reported on Thursday. So it's coming up tomorrow in the after hours, I believe. And I think the guidance associated with that, I may not be correct with that, but I believe the guidance with it was looking good. And so it gapped up into the day, opening above the, 21-day moving average here, and then moving up to fill this gap. Dashed line means a gap that has not been filled, and now we've got that nicely filled gap there. And, it looks like we're bumping into this uptrending level that I have drawn here that's based on, looks like the open price from November 19th, as well as the closing price from December 30th. So we got kind of a test of that, a bounce here, another test before ultimately breaking below it, forming a bear flag below that trend line, and then gapping down. And so we closed the day just below that level, also below the 50 day moving average. I'm not sure if I said this was the 21 day over here, but yeah, opened above the 21 day and closed below the 50-day moving average. So, I was thinking that there is potentially a good amount of resistance with this, gap here. A lot of people who are buying here, maybe they want to offload some shares, closing below this trend line, closing below the 50-day moving average. I was thinking, especially with earnings coming up, this is kind of risky. I did have some calls with Celsius. And so I was thinking maybe this is the right time to take that risk off the table. I was effectively at break even today. And so with looking at this, and I'm not going to draw the gap up there. Maybe we come down to 23, who knows, right around there to fill that gap. 23 is actually an important number, which I'll get to in a minute. But yeah, I was just looking at this thinking, this is a big green candle following a gap up. It looks like there's a lot of strength there, but, I don't know. With earnings coming up, maybe I just want to exit, and take some profits. But then I was like, well, I should consider the volume and see if that's telling me something about what's going on here. And we see this massive spike in volume. Normally, we have about 10 million shares traded over the course of the day, and that's kind of the highs over here. Over here on January 22nd, the high volume there was 12.67 million shares traded. And so we went way over that today, 25.28 million shares traded, massive surge in volume, backing up the move, the gap up and continuation. So this got me thinking, well, hey, especially if we're closing above $26 a share, maybe I don't want to sell my calls. Maybe I want to hold on to them. Maybe I want to do a little bit of a gamble with the earnings coming up. And so I don't know, I might lose my money on it. I might trim tomorrow before the market closes. But yeah, just seeing this surge in volume gave me a little bit of confidence in Celsius, and also thinking about this blue line here, right around $25 a share. Looks like I got an alert right there. That gap was based on the closing price from January 31st at $24.98. And so I'm thinking, that's probably going to be some resistance. But if we're going to be closing above that, and if we're going to be closing above, maybe we close above $26, that makes me feel like this is still pretty strong. But then I got to thinking, well, shortened week, Friday's coming up. What's the max pain for Celsius? Because if max pain is like $25, I think that this could get pulled down below 25, close below max pain. The bears are in control, and, I would be out of luck. So, what I did, I did this all while I was at work today. So I wasn't able to look it up on Unusual Whales, but I pulled it up from, I believe, maximum-pain.com just to see what the max pain is going to be for this coming Friday, the 21st. Max pain's $23. We're $3 above that. And so, that's quite a number of strikes between where we're currently at, above 26, coming down to 23. So that makes me feel like, well, it's going to be tough to really pull the price down to 23. And if we do look at the options table over here for this week, just looking at calls so we can see, they're in 50-cent increments. So yeah, going from 26 with these below here in the money, going from 26 to 3, 4, 5, 6, 7 strikes between where we're at and that max pain. So yeah, that gave me a little bit of confidence. And so I decided to risk it, hold on to my calls for Celsius. And, with that being said, I decided to sell the one call that I had with Wolfspeed. And the reason for that, basically the same reason, or the opposite reason, I guess I should say, why I decided to hold on to my calls. And I do have a couple shares of Celsius, nothing crazy. I'm a small fish, so my positions are all pretty small. But with Wolf over here, what do we see in the volume? I was looking at this trying to understand, is this going to keep going? The contract that I have expires in January, so there's really no risk, but maybe it pulls back and I could buy back. And so I was just like, well, maybe I should look at the volume like I was looking at with Celsius. And as prices going up over the past 5 days, what do we see? We do see, kind of blips in the volume going up over here on the 13th, 27.04 million. And then sorry, if I said Thursday, I meant the 13th. Yeah, that would have been Thursday. And then looking here on the 18th, so that was Tuesday, volume's gone up over 30 million. It looks like 31.93 million shares traded. So that's looking good, as prices going up, volume's going up. But then today, after putting in this big wick up from yesterday and actually getting rejected from that 50-day moving average, which is currently at, let's see, we can see the number over here. It looks like 675. We got rejected from that moving average. So that got me, maybe there's a little bit of concern there. But then today on the 19th pushed higher, but could not close higher than yesterday's high. So the 18th, we hit a high of 716. Today, we hit a high of 722. So, that's better that we're getting to higher highs, but we couldn't close above that prior high, putting big wicks to the top side. This candle for today also having kind of a nice little wick to the bottom there, a little bit of a tail. And, so this is kind of looking like maybe a little bit of a spinning top, suggesting some indecision. Also, I have this line here at $6.81, goes back way far in time. I don't think it's really that significant, so I'm just going to delete that line because it's kind of arbitrary. Really, I think $7. That is a level. We closed below it. So, I just feel like that there's some resistance here with this volume today. It was not as high as I would have liked to see it. I would have liked to see this going up more. So I feel like Wolfspeed could actually be seeing a pullback. I think it could be getting exhausted. I could, of course, be wrong about that, though. But I was just looking at this purple trend line that I had drawn here. Clearly, we broke below it. But when I was looking at this on my phone at work, this trend line looked like it was, extended a little bit more out there. So I kind of was thinking about it. Well, maybe it could pull back, maybe to that uptrend, or maybe to that 21-day moving average around 6, and then maybe bounce something like that. I don't know, and then go like that and go higher. So there would be an opportunity. Well, that's an ugly arrow there, but there would be an opportunity for me to buy back my contract if this did happen, or if not, it's about, for me, it's about managing risk. And I was up 40%. I set a limit order, and it was just kind of a gamble. If that limit gets filled, I'll sell my contract. If it doesn't, that's fine. One contract. And so it did get hit. I sold one contract for a 40% gain, so feeling pretty good about that. And so this is one I'm just going to continue to watch to see if this does pull back, if I can get some discounts around 6. And I might actually add in alert here at $6 a share. So let's do that, and then let's do that below. And this below, I'm going to delete that one. And above 10, why not? I'll leave that up there still. I think that this has potential to be getting above 10. But yeah, with this, and just like what I did with Celsius, I also considered the max pain for this week. So with price getting to, right around $7 a share, I was thinking if max pain is well below, maybe around 5 or maybe 4, then, there's potential for gamma squeeze, which I think might be happening with Celsius. And so that would be a good one to hold. But then when I did look over at the max pain for Wolfspeed, max pain is 6, not only for this week, but, apparently for the next few weeks. And then it goes a little bit lower to 550. And so maybe with that 550, if the momentum does continue to the upside, maybe that 550, maybe around there, that could trigger some gamma movement. But with this being the 3 6s there also, that makes me a little nervous, being, somewhat superstitious. I think that, well, percentage wise, coming down to $6, that might not be that much. If we look at the options table, looking at these calls, that's only a couple strikes away versus Celsius. I forget what I said, 6 strikes away. So yeah, this just seems a little bit closer, and I think that market makers, whoever wants to drive this lower, could push it lower, closer to max pain, right around 6, and that's that moving average there, 21-day moving average. So yeah, I mean, this one seems like it might be a little bit exhausted based on the volume, based on the wicks up here, based on max pain and this 21-day moving average here, and also having had this fairly nice sustainable run. If we do get a measurement of that from the low up to the high, that's a 46, almost 47, almost 50% move to the upside just over the course of 5 trading days, I guess. So yeah, I mean, that is a pretty good move. And so I think that we could be seeing a cool off. And one thing that I might do, kind of just doing this all on the fly, I could do a Fibonacci retracement here going from this low from February 12th, which was at a price of 492. So got that lined up just right. And then the high for today was 722. I just want to get that magnet on there. And yeah, look at that, the 618. Or, if I want to, I could add the 65% retracement on there, get that golden pocket on there. And that lines up beautifully with that purple uptrend, which, might be a little bit wonky because, to be honest, I don't really know why I drew it like this. But that's how I had drawn it. And so, yeah, $6, psychological level, 21-day moving average, 618, this arbitrary trend line. I think this could be pulling back. So, that's why I sold my one call with this. With Celsius, I do have 2 different call options, one that expires in January, one that expires in June. And so that June one, especially with this earnings coming up, it's a little bit more risky. I like to have multiple months, half a year between current time and expiration. So it's a little risky for me. But having seen what happened with Intel, I got out a little too early. Also with BlackBerry, made money on both of them, but got out too early. And so this just, the data, the chart, makes me think that this is not coming down to this Fibonacci retracement here. It's not coming down to 22. And actually, I think that it could be breaking above this uptrend, getting above the 50-day moving average, testing that as support, and potentially continuing on. And part of the reason why I think that about Celsius is going to be based on some options data. So just wanted to go over a few contracts here. 2 of them I do hold, 1 of them I don't, and then I will also come back around to look at the Wolf contract because, the data here in Celsius tells me that there's a lot of strength. The Wolf data, not so much, but I wasn't looking at that when I was at work. That's just discovering it when I came home. And so anyways, looking at these Celsius contracts, we got the $50 call here. That expires in June. So, looking at the chart, do I think it's going up to $50? I mean, it could be. If we're getting into gamma squeeze territory, which the max pain suggests we might be, yeah, I mean, it could be getting up to 50 or maybe getting up to around 42 at that 200-day moving average. So yeah, I mean, I think that there's potential for that. But also, as I'm learning options, getting more familiar with trading them, maybe it's a little risky, especially with earnings coming up. But anyways, this is one that I hold. And yeah, the other one that I hold is the $100 call that expires in January of next year. So got 330 days before it expires, so plenty of time. But a $100 strike, that's pretty massive. If we look back at the chart here, double top over here, that orange line at around $100 a share. So, maybe a year from now, it could be up there, or at least it could be making its way up there. And I just, sell the calls to take some profits. So yeah, I mean, this one also seems pretty reasonable, but the contract that stands out to me, that's the unusual activity that I've noticed with it, is the $40 call that expires in July, about 148 days from now. And so that one, you might be able to see it here. The open interest is 39,000 contracts. And if we scroll back in time, let's see how smoothly I can do this. I might actually have to scroll over here. I believe it was December 12th, if I remember correctly, yeah, December 12th, we saw a volume of 38,000 contracts when the open interest was 172, and then the open interest jumped from, 172, increased by nearly 38,000 contracts to be about 38,000 on the 13th of December. And since then, it's gone up and down a little bit. The changes here, you can see the red, the green, all of that. But overall, it's increased to over 39,000. So that tells me that that whale has still held. And if we do look at the premium for that day, that represents over $18 million. So I don't know about you, but that's a lot of money. That's a whale. Throwing it all in here. And if we look at the premium, the average for that day, and actually their average fill was $4.79. So if we scroll up to current time, the average fill the past few days has been sub $1 or 146 today. And so there's still a lot of room to run between the current average 146 up to let's see if I can get it, 479. So this definitely has like 2x, 3x potential. So, I'm feeling really good about it because that whale is still holding. And just looking at the chart, the data that I was going over, it just looks really good to me. And so if I do expand this data so we can look at the net premium traded over the course of the day, also the volume, what we can see with this is the volume is green. It was positive. People are buying contracts throughout the day. And, of course, we saw the stock price go up after it gapped up. And so this was just looking really good. And so that stock price is what's in yellow there. And if we look at what's in red, that is the net put premium. So when this number goes up, that means puts are being bought. That's bearish. When it goes down, it means puts are being sold. That's bullish. And so what we see here, it was kind of flat, was a little bit negative, ended the day positive. So that's a little bit bearish. People are buying puts, so it's not so good. But if we look at the green up here, that is the net call premium, and that's way higher than the net put premium. And so that, to me, it makes me think a lot more money. It doesn't make me think, fact, a lot more money is going long on options with Celsius versus going short with these puts. But that doesn't necessarily mean the number of contracts is going up for calls over puts. These could be cheaper puts and a lot more of them are being bought. However, I don't really think that's the case. I think that just, a lot more money is going into calls versus puts. So that makes me feel, leaning more on the bullish side. And then if we do even look at this bear bull slider here just above my head, 51% on the bull side with a little bit of neutral, but clearly with the calls being much higher, that net call premium being much higher than the net put premium. Yes, I agree with this. Definitely looks bullish to me. And if we look at the numbers, so just over here, we can see the net put premium did increase by over $1 million, $1.4 million versus the net call premium. That went up by $6.79 million. So a lot more. Is that, is that 4 times as much? More than 4 times as much into that net call premium. So yeah, just looking really good there. And another thing I like to do with these net premium charts is just take a step back here. Let's first look at the past 7 days. Stock prices going up, net call premiums going up, net put premium also going up. So maybe a little bit risky there with that sense, maybe some people are betting on this move not being sustained. Also with earnings coming up, it does make sense that people are going to be betting on both sides of that. Maybe these are people just hedging against this. Who knows? I have no idea. But then if we do look over the past 30 days, just to see, do we have like a real trend change? And yeah, so this is the first time that we've seen, whether calls or puts, this is the first time we have seen a net contract premium going up more than $6 million over the course of one day over the past 30 trading days. So yeah, and look at the spike in volume here. Over the course of the day, volume and contracts, net I believe just net contracts traded, volume here is 32.55 thousand contracts going up. So that's 32.55 thousand contracts being bought, whether calls or puts. And we can see the total volume for the day here. So that's going to include what's sold and whatnot. That's 268,000. But this pretty big increase in the volume there that we can see here. So yeah, I mean, this looks like just a massive momentum change. The bottom is in, and I think that we're going to be going higher. So I still think this looks really good. I think that this is going to be continuing higher. And so I'm going to go with what I see in the chart here. And it's a little bit of a gamble with earnings. Maybe I lose some money, but no matter what, I will be learning with that. And also, with learning, do need to follow up with the Wolf chart here. I felt like this might be pulling back, so I wanted to look at the unusual whales data for the contract that I was holding. And so let's come back to here. This was the $20 call that also expires in January, 330 days from now till expiration. I like to just give myself some buffer because I am pretty new to contracts, and so I like to have some wiggle room as I am learning. I don't want to be panicking as that expiration date is approaching. But so with this contract, really not that much exciting here. Haven't really dived into the individual contracts and stuff, so I really just wanted to look at this general data for the net premium here. And so this, to me, it's really just giving me mixed signals. What we can see is volume was increased, was positive buying of contracts the first portion of the day. Then it ended up being more selling, ended the day positive with more buying, but really just, going back and forth. There's a lot of indecision there. That is also reflected, like I said, in this potential spinning top pattern here. Wick to the downside, wick to the top side. People don't really know. They're undecided which way it's going. Bulls trying to push it higher, but people are selling up here and bringing it down. And really just not that much volume on the day. So a lot of indecision here. We can see that the stock price did go up higher, but then it did pull back a little bit, but really just kind of consolidated once it did move higher. We can see that it was a green candle over the course of the day, and so we see that in the yellow over here. But then what do we see with the red and the green? So with the red, that is the net put premium. That was more or less flat, saw a big kind of spike in it, but then it did pull back some, but ended the day positive. And what do we see generally for the net call premium in green here? For the most part, that was negative, so people selling calls. But then it did end the day net positive. And, with that being said, if we do look at that bear bull slider here, it looks like the majority was on the bullish side, but only 38%. A good amount in the neutral zone. And then, it's looking at the bearish bullish numbers up there, they're pretty close. So it's really kind of like a 50-50 day. And if we do look at this, the red and the green both being positive there, it does look like the net call premium was slightly above the net put premium. So that does make sense. This would be slightly, ever so slightly, fraction of a percent in the favor of the bulls. And if we do look at the numbers here, we see the net put premium increased by $9,890, really not that much. The net call premium increased by $17,130 thousand. So that's about double. And so, this does seem like it's a little bit more bullish, but this has tens of thousands of dollars behind it. Whereas if we look at Celsius, it's got millions of dollars behind it. So that is the reason why I decided to exit this call with the goal, with the plan of buying back if it does dip to around 6, because overall, I think the chart looks really good. And I think that, a year out, I'm definitely playing it safe, but I just want to be practicing taking profits, lowering that risk. 40% is no joke, so I'm happy to have taken that profit. Not a huge amount of money, but that percentage is good, and I want to get practice with that. Reading the charts, the volume, the max pain, the options data, the wicks to the top side, the spinning top makes me think that this is going to be pulling back. So I wanted to act on that. With Celsius, I'm a little reluctant, in all honesty, with this earnings coming up. But with what I'm seeing in the data, the chart, the options, the max pain, I think this looks incredible. And so, yeah, I mean, I might be trimming, especially with the contract that expires in June. I might be trimming tomorrow before earnings. But with that one that expires in January, I'm going to see what happens with earnings. I'm excited about this. I do have a couple shares, nothing too exciting. I think my average is around 525 or maybe 25.75. I'm not exactly sure. So I'm in the green there. But I just want to hold those for the long term and, it's small position so I can hold without sweating it. So, yeah, I mean, that's just kind of my plan, my idea with these charts. I wanted to go over it with you guys because I thought it was just a really nice compare and contrast, making a decision, what looks bullish, what looks like it will continue versus what looks like it's showing a little bit of weakness. And so, anyways, as always, those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and make sure you subscribe to the channel for more videos like this. Thanks a lot for watching, and have a great rest of your evening and great day tomorrow on Thursday. Take care of you guys.